Welcome back, everyone, to season 2 of Beyond Moon. My name is Jerry Hall. Today, I have a guest, Mr. X. Now, Mr. X is a member of the XRP community, and we've been communicating offline since he discovered my YouTube channel and my presence on Twitter, I guess. Now, this is a young man. He's in his 40s, mid-40s, and he has started a plan. Now, he's heavily invested. I'd say probably in the upper echelon of investors. I mean, as far as the sheer quantity of dollars. And we go through a process of kind of taking a look at where he is at and what his thinking process was. Going through and taking a look at some real goals. Adding a few adjustments to help him kind of, smooth his way. And then making a few recommendations so that he is in a tremendous position to realize his goals, producing those results and living happily ever after. The goal on this channel is that every day I become a better investor, a better human being. And if you're following along with me, chances are your contributions, whether they be in the comments on Twitter or comments on Facebook, you're helping me to achieve that goal. And I want to thank you for it. So please like and subscribe. That conversation with Mr. X is coming up right now. All right. So again, thank you so much for joining me. It is going to be kind of an experiment here. We're going to go through and do an assessment of you as an investor, and then take a look at the process in which, if your goals dictate, the necessity for help outside of yourself. Clear? It's pretty simple, right?
Yeah,
okay.
You got it.
All right. So let's start with your age.
Okay, I'm 45.
Perfect. Now, on a scale from 1 to 10, what would you assign a number to your risk tolerance? Like, how much risk do you feel comfortable taking on a scale from 1 to 10?
5 years ago, I would say it was a 10. Since I've had my child, I would say I'm probably 5 to 7. Say 6 then.
Okay. Now, obviously, when you're designing goals and looking to not only continue to build wealth, but to preserve it, understanding capital is important. So I'm fairly certain you know how much you've already invested into crypto, right?
Yes, I do.
All right. What is that number as far as US dollars?
US dollars as of today is 123,277.
Does that look right?
That does look right. Now, I do have some buy orders right now, but that hasn't gone through. So this is current as of today.
Okay. Now, from the perspective of the building of wealth, is there a reoccurring amount that you believe that you're going to introduce into some investment vehicle on a monthly basis?
Currently, no.
Okay. So we're just going to say no. All right. Now, this is the good part. What are your goals for your investment? Like, or another way to look at that would be, what results do you want produced as a result of your investment?
Obviously, we all want to moon, but in reality, $10,000 a month after taxes.
All right. Another one? Any others?
To not to that would make retirement attainable, and for it not to run out, for that to be a steady income for years to come.
Okay, let me ask, I'll ask a question or two. Would another goal be to preserve the amount of the underlying capital that's generating you $10,000 a month?
Correct.
Okay. All right. How about this? How much of this is beyond you? Like, I know you have a really incredible young son. I believe he's like 4 years old.
Correct.
All right. So is part of your goals or thinking forward have anything to do with him, or is he on his own? You're going to die and all the money is going to be put in your casket.
You know, I would like to leave, I guess, I don't know the correct terminology, generational wealth, him set up for
Right.
when I'm gone. He has something.
All right. So you want to pass the wealth to your heirs.
Correct.
Okay. Now, have you thought about in these goals, for instance, like the $10,000 a month? Is that $10,000 a month going to produce, like, are there goals that you have for that $10,000 a month?
That $10,000 a month would more than suffice a nice new home and a home payment and a car payment, college tuition when need be, and anything else I would need to do.
Okay, so something like with the income, buy or build your forever home.
Correct.
And then you said set up an education fund for your child?
Correct.
Okay. All right. Is there any other little goodies you'd like to add to this?
At this time, no. Now, throughout our conversation, we might revert back to this and add something, but right now, I
All
think
right.
we're that hits the majors.
We'll say number 5 will be open to adding other goals.
Definitely.
Okay. All right. So typically when one is looking at building wealth, there are a lot of slightly different approaches than one who has wealth and is now preserving wealth, right? And so, for instance, and I believe we can go ahead and get into specifics, you were able to capitalize approximately 500,000 XRP with $100,000. Is that a pretty fair statement?
Correct.
Okay. So currently, there are very few vehicles in the digital asset space that would afford you a digital to digital transformation. In other words, when XRP hits a certain value, that you could leverage that XRP to another digital asset that actually pays you to own it in the form of an interest or dividend. So you have to go outside of the actual XRP to do so. So currently what's in the market now are products like, companies like Cred Earn, Nexo, and Celsius. You and I talked earlier, and
Mhm.
you're a Celsius client, correct?
Correct. So, I mean, to be specific, I guess that 123,000 I have invested
Uh-huh.
has been since April of 2019 to currently now. I've bought XRP as high as 40 cents. I bought it down to as low as 11 cents back in this past March. Uh, and currently I have 536,000 XRP sitting at Celsius Network,
And
gaining
you're
a uh, interest of 3.61%, and that is paid. That's compounded and paid weekly uh, through them. I currently have another $20,000 sitting on an exchange that if XRP happens to fall a little bit, I'm going to purchase more, which will put me right around, just give or take, right around 600,000 XRP, and I will not purchase any more.
okay.
That will be my limit.
And currently you said it was 3.41.
3.61%.
Okay.
And that interest rate with them, I don't know how other companies work, with them can vary. I don't know how that's calculated, but it's been the 3.61% weekly for the last 4, 5, 6 months, something in there. So
Okay. And
pretty solid.
the 3.61% is actually an annual percentage rate, right?
An annual, and then it's paid on a weekly
It's
basis.
right. Okay, got it. Now, so there's a couple scenarios that you got to run through, right? So obviously the XRP token price today doesn't afford you to take your disbursements and your quote unquote interest from Celsius and arrive that dollar amount per month, right?
Correct.
All right. So a couple of the things that you'll have to take into consideration are, one, what gross is relative to net. And when I say that, I'm talking about, so any disbursement your capital is going to generate for you is going to be taxable income unless it's coming out of, for instance, a IRA account that's a Roth, like a Roth IRA. So you've made contributions to your Roth IRA, and now it's, you're technically able of, by age and guidelines of that Roth, able to now start taking disbursements out tax-free. I don't know if any of this is going to apply to you. So, because I don't believe any of this is set up in anything like that, correct?
No, it's not. No.
Okay, so we're not going to have that discussion as it pertains to taking a look at the very first kind of what would be the ideal situation. So ideally, the ideal situation for you is that you really don't need to change anything or do anything except go from compounding your interest payments from Celsius to receiving them on a weekly basis as income. So in order to do that, and let's just say taking time frame and putting it off to the side, so there's no time horizon here, we're just looking at math and some numbers. If you're looking at 500,000, and we're going to keep it, I'm going to use that because it's the easiest for me to deal with on the calculator. And we're taking a look at the 6.61, right?
3.61.
Yeah, that's what I meant to say. I apologize. So is it fair to assume that the 36,000 that you have in there is that 36,000 beyond the 500,000 has come from interest that you've received since you've been with Celsius?
No,
or you've
that's
added
just
other XRP to it?
Yeah, that's correct. Yeah, that's just been the accumulation. The
Okay.
123,277 is the 536. Now, I've been gaining interest this whole time with them, but roughly it's that number there.
Okay. Well, when I break it down to what your interest, if that interest stays the same, let's say the 3.61 stays constant,
Okay.
right? Now we know it can fluctuate. I don't know what it's going to be. You don't know what it's going to be, but for purposes of this kind of calculation, to kind of start to understand how these things are going to work, we'll just use that as the constant going forward. At the end of the year, divided by 12, you'll have 1,504 XRP every month being generated by next Celsius that you're receiving. You're no longer compounding. You're receiving that as an income. And if that's the case, to receive 10,000 US dollars, you're going to need this to approximately be what, $10 per
Roughly.
XRP?
Yes, we're on the same page there.
Right. So I'll put in parentheses here. You're going to need approximately a $10 XRP to accomplish this goal, because even though you're getting 15,000 a month in US dollars, you're going to be taxed on a short-term capital gains rate, to the best of my understanding as it pertains to tax law today. Now, go ahead, please.
Let me ask you a question, Jerry. Because it would be this is a question I don't know. Because the interest that's coming in, I would be selling the interest. I'm not selling my base amount of coins. Does that interest, is that capital gains, or is that considered ordinary income?
I'm sorry, it would be considered ordinary income.
Okay.
See,
So
here's
then,
the thing. This is what I know for a fact, that once you exceed $38,800 a year in interest payments, there's no avoiding tax.
right,
So it gets paid
right.
as normal income tax. And so you know better than anybody from your federal tax returns as well as your state what your tax bracket is.
Okay.
Right.
Yep.
And every single person is going to be different. Like a guy in California who's, making $15,000 a year because he's got a side job, versus a guy in New York who's making $250,000 a year. Those are, you got different state laws, you got different tax brackets. So everybody's tax is going to be different. This is where getting a professional and going over this prior to executing a plan is like crucial. And kind of what this whole series on my channel is going to be about is going to be what you and I are doing right now. You can do by yourself, and that is kind of understand your goals, right? You can do that by yourself and do some back of the envelope calculations so that you have an idea and can hone down when you do speak to either a licensed tax attorney or you go see a wealth manager, because maybe you're going to diversify out of the digital asset world and further diversify into maybe bonds, stocks, gold, ETFs, who knows? You know what I mean?
Let me ask you this, Jerry, and my Zoom call cut out there for about 5 seconds, but would you recommend I go see an accountant or a tax attorney or all the above? Do you mix it up? Do you just go see a certain one? How does that work?
Well, okay, so a lot of it's going to always boil down to, like, for you specifically, I don't need to look any further than your goals, right? So when I see number 3, pass the wealth to your heirs, probably one of the very first things that comes up for me is you're the type of person with this goal that most likely is going to create a trust, whether it be an irrevocable trust, whether it be a revocable trust. You know, there are many different kinds of trusts, but if you want something that lives beyond you, then a trust most likely is going to be an entity created while you're alive to hold, manage, disperse, reallocate the holdings of the trust, so that if you die, the trust has all of it. It knows what to do. It's
Okay.
already been kind of, you know, you've designed it to do what it's going to do. And instead of you being the executor of the trust, when you die, maybe it's your son, maybe it's your mother, maybe it's depending upon, you know, if you put limits on it, like if your son's not 18 yet, or if you know, maybe you put conditions on it, your son can't become the executor of the trust until he graduates college, or I mean, you know, whatever the
Sure.
conditions you put in there are, you're most likely going to have a trust. Well, if you're going to have a trust, you want a licensed tax attorney. You want
Okay.
somebody that
Okay.
understands estate planning, who can create this legally recognized entity that is the trust.
Okay.
So that you're going to, you know, a regular accountant may not suit the needs of a person that has that kind of goal.
Okay.
You know what I mean? So it's just,
No,
it's
no,
something
yeah.
to consider and to think about and to have in your mind, that like before you even go, for instance, in an interview a licensed tax attorney, maybe you've done some homework on different kinds of trust and just kind of got a general idea of what
Okay.
they are, how they work, what purposes they've served in the past. Will those previous purposes, do they meet any of yours? You know, how designable or programmable do you want the trust? I mean, heck, by the time this happens, you may be able to do this all on the blockchain.
Right. Right. Right.
You know what I
Well,
mean? And have some kind of really cool um, type of deal where, you know, if you pass and the oracle that's tied into the blockchain recognizes your state's death certificate process as being, you know, carved in stone, and that you really did pass, then the mechanisms for pass down to the next person kick in. Well, that person gets recognized by who, you know, maybe everybody's got
right.
global ID or something that's in your framework there, and it might all be
Sure.
super seamless. Avoid all the weird probate stuff and just, you know, all the weirdness that comes when somebody passes and assets have to be reallocated, or new ownership is
Sure.
established. You know
Sure.
what I mean?
That makes complete sense.
Yeah. So I hope I answered your question with that. Did I?
Yes.
It might have
Yes.
been a
Yes.
long-winded answer. I
No,
apologize.
no, no. I appreciate it. No, that's great.
Okay. So back to, let's kind of get back to, if goal number one, right? If
Hmm.
No, not goal number one. If process number one, if process number one was to stay within the crypto world, we would need about a $10 XRP,
Correct.
given what you have.
Correct.
Okay. Now, because you're 45, now I'm gonna do a bunch of these. So I'm gonna do one with somebody in their 20s, somebody in their 30s. Obviously, you're representing the 40 to 50 crowd. I'm gonna get somebody in their late or mid to late 50s. Every kind of demographic is a little different, because the one most important factor for any of these things is time horizon,
Hmm.
right? Is time horizon. And none of us can predict the market and say when $10 XRP is going to happen. So
Or if it ever will.
or if it ever will, exactly. So my question to you, the first one that pops into my mind is, is there something beyond this that you see, or is this your only shot for these goals?
I'm going to try and answer that, and I hope I answered. I'm going to answer it in two parts. My thought process, because we don't know if XRP will ever, we could all hope, but we don't know if XRP will ever hit $10. But I personally think it will at least be $2 or $3 at some point in time. $4, maybe $5. I think that's a reasonable assumption if there's such a thing. So the reason I have an additional 20,000 sitting on an exchange is to buy another chunk of XRP and be right around that 600,000 coin mark. And over the next year or 2 years, if XRP hits that $3, $4, $5 mark, and I don't have a gut feeling it will hit $10, I will sell that 100,000 XRP at $3 or $4 or $5. That gives me a big chunk of money. So now I have another 3 or 4 or 5 years to sit and wait to see if XRP will hit $10, and I still have my chunk of 500,000 XRP there.
Okay, so I understand exactly what you're saying. So you're basically saying a secondary process is that we've got 100K XRP that can be sold at $1, $2, or $3.
Yeah, and my thought process is what that does is that gets my initial investment back. It gives my original investment more time to mature, and it's kind of like a set it and forget it type thing. Then
it sounds like what you're saying is that you're going to take $23,000 or $20,000 and set up a backup plan that you're hoping
that breaks me even.
Well, that 20,000 will generate either 100,000, 200,000, or 300,000.
Correct.
Or you'll sell it off in 33% increments. Like if it hits $1, you'll sell 33,000 of them.
Right.
If it hits $2, you'll sell 33,000 of them.
Right.
If it hits $3, you'll sell 33,000 of them.
Yep.
All right, which is just under 200 grand, right? I'm just rounding off the top of
right.
my head.
Yeah.
Okay, and you're thinking that having that money in the bank will cover all your living expenses, vodka Friday nights, hamburger Tuesdays, taco Thursdays for the next couple years.
And it makes me not worry what the price of XRP is. And if it shoots to 10, 20, 30, that's a bonus. If it goes to 0, it was a fun ride. I got my initial investment back out, and it was a gamble in a sense, because regardless of what everybody says, any investment is a gamble at some point in time.
And this is true.
And that's kind of my take on it. That's my take.
Well, here's the thing: it's your money. You get to have whatever take you want, and that goes for anybody else out there. There is no one size fits all strategy or plan that's optimal for every person in every situation. So, the whole idea of this video and the subsequent videos that are going to follow it are to create thought-provoking periods so people can start to design and prepare themselves to truly meet the goals that they have. Now, for some of us, we may be very clear what the goals that we have are, but as we go through the actual process of how are we going to produce those results, find that what we actually have to work with, it's unrealistic to produce those results. And I think that's an important element of the
Okay.
design process that people need to take into account, that maybe the thinking that they had, they don't have enough, or they're not positioned in the right way to produce those results. So maybe they need to switch or change their processes. So when I take a look at your situation, I don't see anything necessarily bad or wrong with it. I would bring up a couple of these things for consideration, and for consideration only, and that is, one, you have a very narrow process,
Okay.
a very narrow process, and if you think of this from a, how do I factor risk into this? The more narrow your process, the higher the risk. So for instance, your whole plan is contingent on XRP seeing market price unlike it's ever seen in its history. Now, that's not to say that it can't happen. I'm not saying that at all. I'm just saying it's never before happened. You know what I mean? It'd be kind of like looking at me and going, all right, well, Jerry used to have a full head of hair, but what are the, and it could happen again. He could regrow all his hair. Some, magical elixir could come that I rub on this sucker, and all of a sudden, I've got Bon Jovi hair again. Maybe that wasn't the best analogy. Forgive me. The point is, the more narrow your focus, the easier it is to not hit the target. How's that?
Right.
Is that a more understandable way to say that?
No, I agree with that 110%.
Okay.
I agree with that analogy 110%. What drew me to XRP to begin with, and I actually read and studied XRP and Ripple and the whole industry probably 6 or 8 months on a daily basis before I ever purchased a coin. And I've purchased many coins and sold different ones, but XRP has been my baby, and it's the only one I currently hold. And I decided to stop messing around and invest as much money as I could in one asset to hopefully gain the biggest outcome.
No,
Yes,
totally
there'll be a lot of winners there, but that's kind of how I focused on me personally. That's why I focused on basically Ripple, XRP. I'm betting on the team, and it's like betting on a horse. You can pick a great horse, but if you have a shitty jockey and a shitty owner, that horse won't win. So I'm betting on Brad Garlinghouse and Joel Katz as the owner and the jockey, and XRP is the horse running the race. And
okay.
that's a weird analogy, but that's how I see my investment.
All right. So after hearing this and looking at this, a quick evaluation, my recommendations would be to you're gonna want to interview several licensed tax attorneys.
Jerry, when I go and I set up an appointment with these people, that should be a free consultation. I'm not paying for that service, or am I?
9 out of 10 of these folks do offer the first consultation is free. Absolutely.
Okay. All right.
Well, I mean, I'm sure you could find one that doesn't.
Okay. I just kind of curious what the normal.
Generally speaking, a first time client, first sit down consultation isn't about the amount of money necessarily. It's not about exactly this or exactly that. First initial consultations that's why I call them interviews. Should you as the future client, you're interviewing somebody that is going to work for you, right?
Mm-hmm.
Now,
correct.
keep in mind there are a couple of things to think about. There are advisors, brokers, and fiduciaries in almost every one of these particular verticals, whether it be, you might find a tax attorney, right? A licensed tax attorney who's also a broker. So he may sell insurance products that are important for your whatever, maybe part of your estate plan or part of this or part of that. Who knows? I mean, it's a pretty big, wild, crazy world. The one thing you want to keep in mind with any professional that you're dealing with is, and it's always best to go in with a list of questions. Now, I know you showed me a list of 10 questions that you found on the internet. I think
Yes, sir.
those are excellent. I have a PDF with 20 questions. The trick is that if you make 3 appointments with 3 separate people, ask each of them the same question. Don't ask one guy 5 questions, the other guy 6 questions, and the last guy 3 questions.
Okay.
Make sure you ask them all the same questions,
Sure.
Get their answers down, and go back and review. And there's obviously things that are intangible, right? You get a sense of people.
Sure.
You know what I mean? And that can't, for a guy like you who's used his wits, to get this far down the road, obviously there's something to trust there. So that's a big part of the consideration too. But for the folks that are listening to this, I'll provide in the description below a PDF of 20 good, solid questions that you would want to ask any wealth manager, financial advisor, certified financial analyst. There's a ton of acronyms for these people. They'll be down below. And a lot of them, these very same questions could be directly applied to licensed tax attorneys or CPAs or certified tax preparers, right?
Okay.
But for the situation that I'm looking at with you, if you go with process number 1 and basically you're never ever really selling out of your XRP position, then a fiduciary wealth manager isn't really going to be a necessary member of your team going forward, but you'll absolutely have to have a licensed tax attorney who's going to have a fiduciary responsibility to you. And it looks like with what you want to do, having a trust is going to be a part of that. And so, you're going to have legal involvement, which you want to protect yourself legally. So as well as all the, go ahead.
I'm sorry. Can you explain what a fiduciary actually is? I guess the definition of that. I don't mean to sound stupid, but
No, it's a fair question. So there are legal designations that have definitions and that have like ethical codes that are associated with them. So for instance, if you're a certified financial planner or a certified financial advisor or a certified financial analyst, you've passed a bunch of tests, but you also may be selling products. Like you may have a relationship with the Vanguard Index Fund Company. You may have a relationship with Prudential. You may have a relationship with Vanguard, who knows? And they give you commissions on the products that you sell your clients. So not only is your client paying you for your advice, whether it be in the form of a percentage of your portfolio or a management fee or a maintenance fee, but they could be getting commissions from the companies that you're buying their products, whether it be their index fund or their mutual fund or their this or their that. Understand? Okay. That person doesn't have to have your best interests in mind. They're a salesman. Salesmen generally are going to have their own best interest in mind. I mean, sure, they want you as a customer because they can't sell something to somebody, they need customers to sell stuff to. However, it's not legally mandated that they have your best interest in mind. A fiduciary, on the other hand, their first and foremost mandate is to not only provide you the most beneficial information for you to meet your goals, but they're legally obligated to provide you access to the products to make that happen. Does that make sense?
No, it does. Yeah. Okay, cool. Cool.
Yeah. Now, and here's the one caveat with fiduciaries. There are many licensed fiduciaries that are also brokers. And here's the thing. It's not uncommon for one of those guys to be, here's the fiduciary, I'm acting as your fiduciary and I'm legally bound to give you the most sound advice that benefits you. But then I can go like this in mid-sentence and turn on my broker hat, and now I'm selling you a product that benefits me. Maybe it doesn't benefit your portfolio as much as something else does. But because
Makes sense.
this product benefits me, I get an extra commission for it. I have an incentive to sell it to you.
Right. Okay.
Get what I'm saying? So that would be a question. So
Okay.
I think almost every list of questions I've ever seen on the internet that pertains to these are the questions you should ask a potential financial advisor, wealth manager type person, always in that list of questions is, are you a fiduciary? Are you a broker? Are you both?
Okay.
Now, keep in mind, that is what it is. And, I mean, I'm sure anybody can be slimy regardless of what kind of licensing they have. But generally speaking, fiduciaries are going to act in your best interest. Now, another thing, there is an incredible governmental website, and it'll be linked below here in the description of this video, that you can go check out any licensed wealth manager, tax attorney, fiduciary, doesn't matter. If they hold a license to do what they do, you can go to this governmental website, see their experience, years of experience. Has there ever been a complaint against them that's been filed? Has there ever been charges filed against them? Have they ever been caught doing something that's outside of the legal and ethical realm of their licensing?
Excellent. Excellent.
Yeah, it's really important stuff.
Okay.
So,
All right.
yeah. Anything else before we close it up? I think we've covered some really good ground.
No, I appreciate the time and just the effort of kind of breaking this down and going over this. I know since I started investing in digital assets, I guess you could say, my thought process has changed about 100 times, and my goals have changed about 100 times.
And
but
they will
now
again.
And they will again. I know you're exactly right, but I think as of recently, in the last several months, they're kind of being more specific and narrowing the goals down than having kind of a scatter shot effect. I'm getting more focused. And obviously, we still have time because, as everybody says, that XRP has not mooned yet. But I think this is good to start this plan and be more specific, so it's easier to move forward when I need to.
Absolutely. So here are two things I would suggest. In your local area, so within a 45, 60-minute drive of your home, right, geographically, Yellow Pages, internet, however you want to do it, look for licensed tax attorneys.
Okay.
Get yourself a list of 10. Check them out on the internet. Narrow that list down to maybe 5 that you're actually, after looking at their quote unquote internet presence.
Sure.
Do they have are they active on Twitter and Facebook? Are they engaged in the same quote unquote kind of community type or social platforms that you are?
Okay.
You know what I mean? These things could be value added type of things, because you get to see how are they interacting with the community? How, what do they do? How are these people? Who are these people? Then when you get your list down to about 5, you'll get your list of questions together and go get 5 initial consultations.
Okay.
You know what I mean? So that you can hone down and get to the guy that you want to add to your team.
Right.
Right.
No, I mean,
Got that.
it makes 100% correct right there by doing that.
It makes sense. Exactly. And then
Oh,
the
yeah.
other thing is, because I do honestly believe with the goals that you have, a trust is in your future. So instead of having the guy that's going to set up the trust try to educate you, get yourself a little educated beforehand. Hit some of these YouTube channels that describe trust, the different trusts. What's the difference between an irrevocable trust or a revocable trust? What's the difference between this kind of trust and that kind of trust?
Okay.
You know what I'm saying?
No,
Because
definitely.
the more you understand that, the more you'll be able to hone in the more specific questions when you get to that guy.
Right.
gal.
Right.
You know,
Okay.
ladies, I'm
Okay.
not trying to be that entity that is going to represent you for your taxation and legal needs.
Okay.
Yeah, and other than that, it seems pretty straightforward. The one other element that I would ask you to just leave the door slightly cracked open to is ways and means in which your capital can generate income for you that are outside of the crypto world. Because like we said, there's no guarantee. There's no guarantees.
Right. No, that is actually correct.
You know what I mean? So one of the things that you might want to take a look at, here's some terms for you. They're called dividend aristocrats. And that is kind of a section of dividend paying vehicles like stocks and things of that nature that have a very long history of being very solid providers of a dividend over a long period of time, like over 20 years.
Yeah, I actually saw a YouTube video of you and Dave, or I guess Cryptopolis.
Oh, yeah.
And that was actually highlighted on there, and I actually went to that site and looked some of that stuff up.
Oh, okay, good. So you're aware. Excellent.
Yes.
Roll right on. I'm certainly glad that you took the time to have this discussion. It helps me refine and understand my process, because as I'm talking to you, I'm also talking to myself in a way.
Well, I appreciate the effort that you've taken to kind of walk me through these things, because it gives me a different perspective and a way to look at things, which is wonderful.
Well, I think, you know what? We're all in this together. We're part of a larger community. And the idea is that we can help each other out, little this, a little that. And each day we become better people, become better investors. And I think that just makes the planet a little better, right?
Yes, sir. Yes, sir.
All right. So folks, thank you so much for tuning in to this particular episode of Beyond Moon, and look forward to the next several that are coming out, because we're going to explore some different demographics. That's right. We're going to have a young lady in her 20s. We're going to have an old fart, and we're going to have a millennial in their prime earning years, all going through their crypto plans. We'll discuss them. We'll talk about best practices and best strategies. So come back, subscribe, and all that wonderful stuff. Mr. X, you were wonderful. And for you ladies and gentlemen, please feel free to leave your comments in the comments section. Let us know how much of Mr. X's plan is part of your plan. Was there anything in this particular video that really, rung out to you, spoke to you? Or do you think this whole thing is rubbish? Are we absolutely crazy for thinking about how to safeguard and preserve our wealth when XRP is at 28 cents a token? I look forward to hearing those comments. Remember to like and subscribe. And until next time, everybody, Pura Vida.